When we started 2012, things were looking pretty good, but now here we are kicking off the summer this weekend, and things are starting to look a whole lot more negative. I'm here with Ken Polcari from iCap Equities. So, Kenny, we were just talking about how Tiffany sent a warning shot saying that their guidance is down, and then when I look at the unemployment claims, not great, and then also the durable goods orders, not great. In fact, you know, all those manufacturing numbers that we got at the beginning of the year that were looking good, they're now starting to pull back. I'm starting to see that wall of worry.
Well, listen, and we've been talking about this for a while, and in fact, the U.S. macro data reports are starting to come in flat to negative once again. When the first quarter they were flat to positive, and everyone was getting excited and thought maybe we'd really turn the corner. But there were strategists and economists that were saying slow down and hold on because the future does not necessarily look so bright, and in fact, we're going to see that as we move into the spring. And here we are in the spring, right, and we're into now late spring, and we're starting to see, in fact, a breakdown in some of the macro data. That's concerning, and it should be concerning. We're also seeing the complete breakdown once again in Europe as a result of the last political campaigns. We've seen the turmoil that has brought right up to the surface again, and so that creates, again, a complete wall of worry. Now, that being said, we actually are holding in fairly well. I think, though, that we do test the 1277 range on the S&P, which is the long-term 200-day moving average. I don't think people would be surprised if we went there, considering all the news that's out there.
Is it time to get defensive?
I think in light of everything that's gone on, you should be playing it a little bit more defensive anyway. That's the type of investor I am, right? I tend to be more conservative, so I tend to be a little bit more defensive. But I think you have to be defensive. And I think on any weakness, you really should be, when you look at your portfolio, when you look at things that you're interested in buying, you should really be looking at the strongest names within any sector group. The weak names you should get rid of, and you should add back to those positions in the stronger names. And the names that represent, like, you know, I hate to say it, like big Americana blue chip dividend paying stocks are the ones that are going to get us through this.
Blue chip bank stock.
Listen, you know what? It's a very interesting story right now, but I happen to like the banking sector. No matter what's happening, I happen to like it. I actually think that some of the names are cheap. They've gotten cheaper. But I think if you have a long-term view, I think you're actually okay. I don't think any of these big banks are going out of business.
All right, that is a big surprise for me. We're going to see how that plays out. That's Ken Polcari from iCap Equities.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're getting